Good morning, everyone, and welcome to the weekly market review for Monday, 14th of March to Friday, 18th of March, 2022. My name is Vishal, and I'm going to be reviewing the markets for this week. So let's dive down deep into the markets. Let's start with the Nifty. So as we see right now, the Nifty is currently trading at 16,650 odd levels, and price has taken a nice bounce at this monthly demand level. So when prices are in control on the higher time frame, we are expecting this market to either consolidate or remain a little range bound between the high of this area over here, which is 18,586 to 15,084. This is going to be the broad market range in the coming few weeks or in the coming few months, since this monthly area has taken a bit of a support. Let's go on to the weekly chart. Now, as the prices are bouncing from a higher time frame monthly demand, there is a possibility that we might inch a little bit even higher. And if everything, mellows down on the war situation, then we will have no hesitation for the market to move and move up drastically towards these areas over here. Let's move on to the daily chart. On the daily chart, we have this daily supply level over here. Now, this is a strong level of supply because the prices have gapped down from this area. So if there is strength in the market and the market does continue to move to the upside, what we might see also happening is that we might see something like this and then corrected move to the downside. Okay, so this is an area to watch out for on the Nifty, a very, very crucial level in the short term. And depending on how the market reacts to this level, the next move for the Nifty will be decided. If the market breaks the level to the upside, that is, if the market does something like this, then again, we might start moving even more higher towards these areas or even these areas. So it's going to be an interesting scenario to watch out for in the coming weeks on the Nifty. Let's move on to the Bank Nifty chart. On the Bank Nifty, on the monthly chart, we are seeing that prices are taking a little bit of a help of this monthly area, and they are not able to make new lows. So this is also a sign that the market doesn't want to go lower, irrespective of whatever news is out there in the market, and market wants to consolidate a little bit and is slowly showing a little bit of a bullish bias. Okay, on the monthly chart. If you go to the weekly chart, we are seeing more or less the same thing. The prices are bounced out of this this demand zone over here. Now this demand zone is tested, so even if the price comes back into this area here, we are not interested to take any long trades. But this bounce might cause and push the market to the upside. So on the daily chart, we have a supply zone which is more or less lining up nicely with that Nifty supply zone around 35,911 to 36,680 odd levels. And if both the levels hit simultaneously, then this can be a good correlation opportunity both on the Nifty as well as on the Bank Nifty. So if the Nifty, if the Bank Nifty, tends to move towards this area, we might expect to see some correction coming down. And if the Bank Nifty eventually breaks this area to the upside, then we might see the Bank Nifty moving towards these areas, or let's say even closer to these areas. Okay, but only time will be a factor to decide if that happens. Right now, 35,911 to 36,680 is going to be acting as a strong barrier for the Nifty to move to the upside. Okay, so just watch out for this level and just be careful on the long side because we are coming closer to the supply zone. Let's look at the USD INR. Now, the way USD INR operates is the USD INR is inversely correlated to the Nifty movement, right? So if you look at the monthly chart of the USD INR, the USD INR right now is consolidating, although it has broken the all-time highs. we need to be a little careful, because generally when any stock, index, or currency pair, breaks to the all-time high, there is some profit booking that might come into these instruments, to say so. If you go to the weekly chart, on the weekly chart also we are seeing the prices have broken the high. Right now there is no clear direction, but it is still showing that it wants to move a little further up. Okay, so if you look at the daily chart right now, the sign that it wants to move up further is because price has taken help of this rally-based rally demand zone. And if USD INR continues to move to the upside, there is a possibility that this will bring our markets down. And if USD INR continues to move to the downside, then that is going to push our markets to the upside. So right now on the daily chart, we are seeing some weakness on the USD INR. And because we are seeing this weakness on the USD INR, there is a possibility that the markets today might tend to be a little strong on the indices as well as in the bank nifty front. So let's go to our intraday chart now, and let's have a look at some important key levels on the USD INR. So on the USD INR on the 60-minute chart, we have this drop-based drop level. And this is an intraday level which was created on the 9th of March. So what are we expecting? Right now, prices are bouncing from this area of demand and inching towards this area of supply. So there are two things that can happen here. Either price can move into this area of supply and begin to start moving down. If that happens, Nifty, Bank Nifty will push further to the upside. But if the USD INR continues to move up from this point, then Nifty and Bank Nifty will start moving to the downside. So this is how you can play with the correlation and identify some high opportunity trades for the coming week on the Nifty and the Bank Nifty. Let's move on to crude oil. So this is also a good indicator for us to know about what the markets are wanting to do right now in terms of the movement as such. Okay, so if you look at crude oil is has significantly gone up, and obviously for the obvious reasons, the tensions between Ukraine, Russia, and the war, etc. And if you look at the weekly chart, the same thing has happened, right? So this, as I mentioned last time around also, that this is a sign of a bubble. And generally when this happens, as much as the price goes up, eventually the same way the price can come down. So now what is a crucial area for the crude oil to watch out for with a longer term perspective? So we have this weekly demand zone on crude oil around 6,554 on the MCX charts. So this is an area to watch out for. So in case if there is a significant strong move of crude oil to the downside, 6,554 will act as a good demand, and we might see crude oil again resuming its uptrend to the upside. All right, let's move on to the daily chart. So on the daily chart, the levels are pretty similar, and we can probably look at this level as well on the daily, where prices can easily come down to this area and then start bouncing up. Now, if you look very closely, crude oil is taking a little support at this area as such. Okay, so there are two things again to watch out for. Crude oil can continue to rally to the upside from this area. And if crude oil breaks this area, then it is likely to move towards the daily demand zone. All right. Now, there are some signs that are showing us on the 60-minute charts of crude oil, and there are these supply zones that have been created closer to current market price. So if you keep a close watch on this 91.39 odd level, and if crude oil begins to move to the upside, there is a possibility that once it hits this area, it's likely to resume to go down. If crude oil breaks this supply zone, then we are going to again start moving up, and that is not going to be a good sign for the equity markets. Okay, so just keep a close watch for the coming week on 91.39 to 93.44 on the supply front. And on the demand front, the closest level of demand that you need to keep a close watch on is this level over here, which is 76.49 to 74.62. Okay, so just keep a close watch and just be careful on longs in crude oil right now, because the market has made an all-time high, and when profit booking comes in, then these levels of demand become very, very aggressive. All right, so primarily focus more towards the short side on crude oil than on the longs closer to current market price. Okay, all right, let's pick up the sector for the week. So the sector for this week is the Nifty FMCG sector. And right now on the monthly chart, things are not looking that great, except for the current month. We are seeing this strong buying that is coming in on the monthly candle. Well, we still have a couple of days for the monthly candle to close. So we do not know whether this candle will close very strong and, to the green, or it will close as a red candle. But however, the current signs are showing that there is some buying that is coming in from the monthly charts on the Nifty FMCG. And that is what is going to take all the likes of stocks such as ITC, Hindustan Unilever, Dabur, Nestle, right? So these are the stocks to watch out for. If you look at the weekly chart, there is a strong area of supply which is created over here. And this is going to be a crucial area for the Nifty FMCG sector. Okay. Usually when you see a strong green candle like this, okay, and this is more or less in candlestick patterns, it's like an engulfing candle. This tells us that there is going to be a very, very strong fight between bulls and bears around this area. So the way we want to look at this is that in the coming few days or in the coming few weeks, if the Nifty FMCG sector hits this area, and if the price starts to move down, then we will see a lot of downtick on the FMCG stocks. But if the Nifty FMCG continues to start moving up, then we will see the likes of ITC, Dabur, Hindustan Unilever moving to the upside. So let us look at one of the stocks from the FMCG sector, and we're going to talk about ITC today. So ITC on the monthly chart is currently just consolidating. It has created this new level of monthly demand, but right now there is a very strong level of monthly supply as well. So those who are already long on ITC need to just be a little careful of this 270 handle, because this 270 handle is going to probably act as an interim barrier for ITC to move to the upside. Obviously, as I said, that there is also that weekly supply zone on FMCG sector. So there is a possibility that when that weekly supply zone on Nifty FMCG is hit, at that time ITC might hit the 270 odd level. And if you're already in ITC, this can be a good level to exit and book and take some profits. If the Nifty FMCG level breaks, it is going to be obvious that ITC will also break this level and more or less continue towards the 365 handle, right? So the short-term target on ITC based on the Nifty FMCG supply zone is 270. So watch out for the 270 level for the coming days and for the coming weeks. All right, everyone. Thank you so much. Have a lovely week. I hope you enjoyed the analysis for this week. We'll come back with more analysis next week. Till then, take care, trade safe. Bye-bye, and thank you.
We do not give any recommendations or financial advice. We request that the investors please consult their financial advisors or do their own research before investing.